All right, Zinger Nation, welcome into the open where we get technical. If you don't know me already, my name is Neil Hamilton. I started at Benzinga about 4 years ago. And back then I was just sweeping floors and returning Luke Jacoby's energy drink cans. But I was surrounded by a lot of really good traders, a lot of veteran investors who taught me a lot about technical analysis. And just through osmosis, some self-learning, and being around some really smart people, I've been able to become pretty competent in my technical analysis, and I'm here to share that with you. I don't know everything. In fact, the only thing that I know is that I get lucky sometimes. I know enough to get lucky sometimes, and I'm here to share that knowledge with you. And during this show, half an hour in, every day during the week, we're going to bring in a guest who is a fantastic, world-renowned technician to teach us something. We're going to learn it together so that we can take it to the bank and make some trades based on that. But to get things started, producer Spencer, was there any news that we should cover today? If not, I just want to get right into the charts.
Well, first I want to say, can you just bring your charts up so we have something to look at besides our beautiful faces? You're asking if there's any news at the open or just in general throughout the morning?
Just in general, what's the big move that's the big news that's moving markets?
On a macro level, really not much. On a macro level, where they're just posturing about stimulus, but on an individual micro level, earnings, man, earnings. We talked PayPal today, eBay. We didn't get to all of them. We didn't get to Penn National. We didn't get to United Wholesale Mortgage. Those are some other big ones, but we got some big earnings movers overnight, and so that's kind of the lead of the day. That and this short report that is a new one for me. A short seller came out negative on his stock, and in that report they said, by the way, we're not actually short the stock, we just hate it, but we're not actually short. We hate it, and we think you should hate it too, but we're not short, nor are we long. We're neither. Go figure. I don't know.
Okay, so we live in a crazy world right now. People's opinions matter more than fundamentals, but that's great. I'm a technical trader, so I don't really care about what the fundies have to say.
No, you don't.
I mean, I do a little bit. I care about what you have to say, Spencer.
Thank you.
Love you.
Let's see what we got on this chart here. What is that?
I don't want to get to this yet. Don't look at the chart yet. Don't look at the chart yet.
All right.
All right, so I want to announce that we've got something special going on today, guys. Remember, this show, if you're a person that considers yourself a serious trader, if you're like, oh, I don't look at that because I'm a serious trader, you're taking yourself too seriously. All right, we're here for levity, to have fun, and to find great opportunities and to trade together. I know that I don't know everything. I hope that you know that too. We should always be learning together. So just keep that in mind. But today is really special, Spencer. I don't know if you know, but
no,
I got an email from the Benzinga board last night.
We have a board?
We do. We have a board. Yeah, I mean, so if you didn't know about the board, on our board, Warren Buffett, Kathy Wood,
okay,
and our new addition, Mia Khalifa.
Jesus.
So I got a board address from those three.
And they addressed you by name. They said, Neil, we're emailing you.
Yes, they said Neil, and they said for your eyes only. Okay. On the bottom. And we're doing something special today.
Yeah, what?
For today only, star trader Ricky Gutierrez, check him out on YouTube if you don't know him already. Star trader Ricky Gutierrez is going to be CEO of Benzinga until we cut him off, until he does something wrong. But we're going to introduce him to you as the new CEO of Benzinga today on Into the Markets Getting Technical with me and Spencer. So stay tuned for Ricky Gutierrez. He's going to teach you something really good about technical analysis, a lot more deep dive, a lot more short term than you'll get from me. I'm looking for safe, known patterns with a lot of volume that I can really rely on for big swings. All right. So without further ado, let's get into some charts. All right, guys. Yesterday we talked about NIO, everyone's favorite Chinese electronic vehicle company, competitor with Tesla, ? At any rate, I don't know too much about the company. I do know that they've had decent sales quarter over quarter in their reports, their earnings reports. But what I like about them is they're just so damn technical, and you can rely on it. And yesterday, what I thought was a descending bullish triangle now has formed into something more like a descending wedge. All right, guys. So what I have here for you, I've drawn on it already, but I'm going to walk you through it. And if you guys already know this pattern, great. You get ready for a trade because I think there's something good here. So zooming in, let me know in chat. Let me know in chat if you need me to zoom in more. If you can't see anything, I'm going to give this one more zoom. I tried to make the numbers as big as possible for you guys. At any rate, let me delete everything I've drawn here. So when we're talking about big breakouts, big old swings in the price of a stock during a bullish market, which we're in right now, so we're taking full advantage of that. The first thing that we want to find is an uptrend. That's what we look for. So I can show you how to do that in Benzinga Pro. Maybe I'll do that if we have some time. But the first thing that you need is an uptrend. We've got that. Requirement number one met, ladies and gentlemen. We went from a low to a high in a short period of time with a big surge in volume, looking really good. All right. People were trading volume. The bulls drove it up to this high around 67 bucks. But wait, it started to go down a little bit. It started to trade down. Does that mean the hype train is over? Did the hype train crash? Not necessarily. This pattern is actually counterintuitive. Usually when you're looking for a pattern, you hear things like higher highs, lower lows, or higher lows rather. In this case, we actually have lower highs and lower lows, which looks like something that you would have in a traditional downtrend. But don't let that make you think, don't get off board the hype train just yet. So what we're looking at right now is a formation of a falling wedge. The reason it's a falling wedge is because when we draw these lines for these swings high, these high swings and these low swings, these two lines are starting to converge. All right. So what they will eventually do is converge together if we draw them. So we're just drawing on charts here, guys. This is not something super crazy. It's as easy as it looks. They're going to converge. Where they converge, that point is called the apex. All right. Now, charts are, of course, not perfect because they obey the natural law of human behavior, which is often erratic. So we always try to kind of sketch on them, you know? This isn't like, doesn't have to be perfection, doesn't have to be the Mona Lisa. We're looking for price approximations, but it still gives us a good idea of where to enter, where to set our stop loss, and where it might top out. So that gives us our sell target. So we're looking at this nice descending wedge. Now, to set a conservative price target, let me back up actually. What we want this stock to do is break out above this line. This line right here, this sloping line that I've drawn, this is resistance, guys. The buyers and the sellers are going to battle. It's getting bloodier and bloodier because the buyers are saying, I want to buy at a higher price now. And then the sellers are saying, I want to sell it at an even lower price. And they're going after each other, and it's squeezing this price action together. By the way, I'm on a 4-hour. Let me check okay, you guys seem good with the charts. So they're going to battle, and someone's going to win that battle, and that's what causes breakouts. So what we want to see is a cross over this resistance line, and we're going to try to time that. We're trying to measure what that might result in. So what we have is potential for it to break out here, and then also potential for, a lot of times when you have these patterns, you're going to get the swing high to touch that resistance line 3 times. So this might just touch this a 3rd time, come back down, and then that might be when we get in. But we'll see. It has full potential to do that today. So let's get to it. If I can just delete this stupid thing. Wait, what am I doing? I'm still brushing. Okay, that's why. Sorry, guys, bear with me. All right. So how do we measure our entry? How do we measure our potential profit? You heard me talking about swing highs and you heard me talking about swing lows. Well, the swing high in a falling wedge pattern is this move from the base up to the top where we hit resistance. And then the swing low is from that point down to the bottom where we start to draw that support line. All right, so we want to measure the height of that. So I'm just going to use a simple line tool. I mean, back in the day, they used to do this with a pen on paper or a pencil. So let's go ahead and use this line tool. Pop, pop. All right, and then I'm going to add that to the potential breakout point. So if we get some volume today, if we get a surge in volume, which doesn't quite look like it's happening right now, we actually see the volume coming down. But if we get that surge in volume, your breakout profit potential or your sell target price is going to be this resistance line plus the line that we just drew, plus that measured move. So we're setting a target price of $70. All right, so to break that down in terms of returns, we're talking about 17.5% returns over a relatively short period of time. Now, if you want to go a little bit longer and a little bit more aggressive, you can use this first line that we drew. This is a flagpole. All right, this comes in when this trade successfully reaches the top and then keeps going over time. At this point, you're raising your stop loss. All right, so we're adding a line here from the apex. When we're talking about the pole, always draw the pole at the apex. So actually, let me delete that. I'm going to draw a new one that goes straight up. Whoops. To the swing high on our formation, and then draw this on the apex. Secondary price target, $75. I know it's a little bit overlapped by that USD, but that's $75. So what we're doing here, setting a stop loss conservatively around support at the breakout. So I would say if we were to break out here, you would set your stop loss around $56, and then you would get ready to sell once we hit around $71. These things don't go straight up, they tend to go over time. That's how the stock market works. And then if you get there and you want to stay in, you can happily take profit. What I normally do is take 50% off the table because it's a short-term trade. I want the money, I want it back in my portfolio so I can spend it on other things. Take 50% off the table, raise your stop loss. I usually raise my stop loss to this previous high. So wherever this is, in this case, it would be $71. That's my stop loss. And then my price target is an additional few bucks to get us up to 75. Up to you if you want to pile in at that point. When you have a stock like this that's reaching all-time highs, people don't bet against all-time highs in this market. So what I just gave you is the conservative approach. But with NEO, I'll be honest with you, I will pile in. If we hit this price target, I'm putting more in. And it might go down a little bit. It might go down. But I'm going to buy more because I do believe that we'll hit this price target. All right, that's NEO, folks. All right, so I found another one for you guys today. MARA. It's interesting. There's this coffee mug here. That's really weird. I don't know. Producers must have put that there. What does it say? Subscribe. That reminds me. Did you know that only 50% of you viewing this show right now are I don't know, producers must have put that there. What does it say? Subscribe. That reminds me. Did you know that only 50% of you viewing this show right now are subscribed to Benzinga's YouTube channel? Isn't that weird? If you're not subscribed, maybe just hit the subscribe button. We'd really appreciate it. Sorry about calling you weird. It's worth it though. Just consider it. Just think about it. Okay, but the real reason I got a cup and handle, guys, the real reason I've drawn a coffee cup here is that we have a cup and handle formation. So this is a great pattern. We're looking at Marathon Patent Group, MARA. Todd, shout out to you. You've been saying MARA, my man. Actually, I think we might share a brain cell, Todd, because I've seen you mentioning the same stocks as me a couple times. And guys, I see AMD. I see all the other ones. We'll get to that like right away. So let's take a look at this pattern, really break it down for you, and stop me if you have any questions or you need more explanation. But again, rule number one, when we're looking at a bullish continuation pattern, we are in a bullish regime, we're in a bullish market. The first thing that we want to look for is a nice, strong pull. All right. That's what drives this stuff up. All right. That's what gives us confidence that the bulls are ready to take control because they already have in the recent past. All right. So we've got a flag pull right here looking good. I'm going to make that actually a little bit bigger so you can see it more clearly. Yeah, this one's there we go. We've got a pull. All right. The next thing that you want is sort of like a rounding bottom. Now, typically when you think about a rounding bottom pattern, that's actually a reversal. That's a reversal pattern. But in this case, when we're coming up from an uptrend and then we're getting this sort of round bottom here, and then we're testing this resistance, we're forming what looks sort of like a cup. So let's go ahead and do that. I'll use this guy right here. We'll go to the top, which I think really is about here. Yeah. And then we'll go right here. All right. It's a very, very thin cup. So let me stretch this out. All right. So we got our cup there. And then we've also got the formation of a handle, which is usually a descending rectangular pattern. It's usually a descending flag, if you will. But this is the formation of it's like kind of like a combination of some very bullish patterns. The point here, though, is that we've got this line of resistance that we need to break through. All right. And we're testing it. We came down into this rounding bottom. We had some consolidation, some negotiations from the bulls and bears trying to decide what is the fair value for the stock. Then we had some big buying action coming in, driving us up to the point, even gapping up to the point where we're testing this resistance level. And then we cooled off. Some people took some profit and we cooled off. But the bull said, no, we're not going back down to the base that we had previously. We're not going back down to $14. We like this stock. So we're staying in. And then what you're going to get after that is you're going to test that resistance level. And guys, with these patterns, it doesn't mean just immediate breakout. In fact, it's so often good if it doesn't. So I'm going to get my little paintbrush to give you an idea. We want to boing, boing. We want to test this a little bit because the more times that a resistance level is tested, the more likely that a breakout will occur. And we love breakouts because they can be measured by the previous low. All right. So let's talk about this breakout. Let's talk about this potential with Mara. Shout out Todd. I'm going to delete some of these if it'll let me. Boom. Boom. Get that shit out of here. All right. So we're at this resistance level. What is our profit potential with this? Our profit potential, I've already got this written down. So we'll say the entry point, I'll be completely honest with you. If we're probably going to see some bouncing action here. So I would say look for support around here on where we're descending right now, but we want to test this. And if we get back to the point where we're testing this resistance and you see a close on like the 4 hour or the day chart, and by a close, I mean a candle. So, you've all seen these candles. We want to see one that's very healthily above it. Once you've got that, you're in a breakout. You also want to see a large surge of volume. So this is something I'm timing. This is something that's on my watch list. This is something that I'm setting a limit order on, because when it does close above this, I will buy it. I will trade this stock, and I will expect profits from the base of the handle to this resistance. So a very conservative way of looking at this is something like this for short term. All right. This is a $28 price target. This is something that if I see a breakout, I'm buying call options. All right. Call options mean that I'm paying a certain amount of money to bet that this is going to hit a certain price. And if it hits that certain price, my bet is going to increase in a ton of value. It's going to increase in more percentage than simply buying the stock outright. That's how I play it. I mean, your mileage may vary. based on your risk tolerance. This is not financial advice, but this is how I like to play these. I like to supplement my investment portfolio with these patterns where I'm buying call options on bullish breakouts. So doing this, I'm going to buy that call option, shooting for that 28 with a high degree of confidence that it will get there. The next level is going to be even bigger. So if we take all the way, if we go down to the base, the lowest point on this cup, and we draw a line up to this resistance level, and go ahead and add that to the breakout level, almost double the short-term price target. So if you want to stay in, if you want to take profits and stay in with 50% of what you're in there with, go for it. Raise your stop loss to something around this previous high here. Actually, a lot of folks will tell you to put it 7 to 8% below this, so you don't get stopped out. This is looking like a choppy one, so I might do that myself. I would do it trailing though, because I don't have all day to pay attention to this stuff. I work. I got a full-time job. But we're looking to get up to 31 bucks. So let's just take a look at the profit potential here. I'm buying in 2388-ish. Whoops, wrong tool. I'm going to use this ruler tool. The ruler tool is sweet. Getting in 2380-ish. Looking at 18% profit potential. And then I'm exploiting that by using call options, hoping that I can get them at a cheap price because the whole market's not watching this thing. Actually, I mean, the call option, I mean, it depends on the volume of the stock, actually. This one might not be big enough or good for options. I haven't looked at the options chain, so we'll take a look at that if we have time after Ricky comes on. But for the long haul trade, 33.56%, and that's a target that you can hang your hat on. That's something that within a reasonable degree of confidence, you can expect to happen, to transpire. So guys, that is the trade with Mara. Thoughts? Checking the chat.
Yeah, we're all good there, Neil.
All right,
I'm writing down tickers. Don't worry. So I'm writing down tickers that you're all adding in there. We will hit those with Ricky or afterwards.
Okay, so we'll do this like a trust exercise, Spencer. I'm not going to look at chat.
Okay.
I'm not going to look at it, and I'm going to count on you to let me know.
I got you.
All right. Love you. All right, guys. Sorry that you guys had to see that public display of affection. All right, next up, this one's really similar. So I pulled up this sticker this morning because it was on my. I have a screener set up. I have like my settings all perfect in Benzinga Pro for finding stocks that are accruing momentum and essentially trending, because I love to find those because those form the great polls, and then like the flag polls, so they form the great polls, and then I'm just waiting for a period of consolidation that creates a pattern so that I can get in on that action. So I found this using that screener. This is very similar to what we just saw, right? Like, look. Bop, 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 resistance, bop, cup and handle, ladies and gentlemen, cup and handle. And we know that this stock wants to return that previous all-time highs to the previous all-time high, which I believe it is. Oh, no, it's not. Okay, never mind. Remember, this is not financial advice. It wants to get back to that previous all-time high. And as I zoom out, look at this shit, guys. Look at this. Look at this. All right. Remember, the longer the time frame that a pattern is occurring over, the more powerful the breakout. That's why we're looking at these longer time frames. We got a nice big old, as JC Peretz would say, I don't say this at all, but this is what JC Peretz says. This is quote unquote from JC Peretz, a nice big old Kim Kardashian bottom. All right. So we can probably say something like this because it looks like it was testing that. Maybe go a little bit lower, and we can see that it might be testing closer to the body of this previous candle. And this is a day chart, so maybe I'll bring that up to a week to make things a little bit more clear. Yeah, not bad. So day actually makes more sense here, so we can see more clarity on where, this level is. All right, guys, we're seeing something big here. We're seeing a big rounding bottom, and we're seeing a level tested. This is ticker YRCW. I don't know who they are, what they do, what they produce. I don't know anything about these guys. All I know is that they're worldwide. We tested this level on this rounding bottom. Rounding bottoms fucking rule. Rounding bottoms are what made Bitcoin go crazy recently. Yes, there was a ton of traction from influencers and celebrities talking about Bitcoin that drove it, but that coincided with a huge rounding bottom that catapulted it as close to the moon as it can get for the time being. All right, so we got a nice rounding bottom, guys. I'm going to draw this thing. Ooh. All right, so we're going to retest this. Again, remember, guys, the more times we test resistance, the more likely we're going to get a breakout. So if we hit this level, we're watching YRCW. This isn't even what I noticed when I was doing this chart this morning. I just kind of quickly looked at the short term. Looking at this thing longer term, I think we have potential for something like, because this is a trend reversal, folks. This is our first trend reversal of the show. The show's only been on for 2 days, but it's the first one. We've got a downward trend. Reversals are the best. Reversals are powerful. And we got a downward trend turning into a rounding bottom. This stock is rounding the corner. The bulls are saying that's as low as we're really willing to go. It's time to start buying this thing up. All right. So if you're smart, you get in with the bulls eventually here. So let's time out that eventually. Yeah, nice looking rounding bottom on YRCW. So we're going to set our price target for a close above $6.25. So again, we're looking for a nice candle, maybe a day candle. I mean, look, this thing is going, this is a rounding bottom coming from May 19 to like today, actually from December of the past year to about today. All right, so we're testing this thing. So if we get a close above that resistance line, our potential is from the absolute low to that resistance line plus the resistance line, okay? That's how we set our price target, giving us a price target of a cool 11.25. Let's calculate the percentage returns on such a breakout trade. If you guys can't see that, that is 78.64%. I will buy this stock when it crosses resistance. It's as simple as that. That's big. I just got notification that our new interim CEO is in the lobby, so we'll be getting there in a moment. I'm actually going to close the charts really quick. Let's go to just a cam. Just me, guys. Just me and you. So if you weren't with us at the top of the show, I got a letter from the Benzinga board last night. A lot of folks didn't know we had a board. As some of you know, our board consists of Warren Buffett, Charlie Munger, and Mia Khalifa. She's a new member. And in their letter, they said, Neil, we don't think you're doing a great job. You need leadership. You need direction. You're a mess. We want this guy from YouTube, this trader from YouTube, to take things over. He's been doing a great job. He needs to come on and turn things around. All right. So I said, all right, I guess we'll have him on the show. I don't know how happy Jason's going to be about this, but I don't know how much power he has here. We got Mia Khalifa here, and she's really laying the hammer down on us. So without further ado, I would like to bring on our interim CEO of the day, Ricky Gutierrez, to talk about some technical trading. Ricky, how's it going, man?
Dude, that introduction I was like, wait, really? And I was like, oh man. Then when I heard one of the last names, I was like, no way.
maybe one day. I would say
no, I like it. That'd be a very unique executive board. So
good choice of words, Ricky. Yeah, I do think that would be super unique. How's it going, man?
It's going good, man. I just finished with our LPP team, so really excited to be here. I appreciate you guys welcoming me, and it's been so cool to spend the past couple of months with you guys. So I'm excited to talk about, one of my favorite things to trade are reversals, And I have a couple different examples, and as well as not just a perfect picture example, but some real life examples of ones that go according to plan, and of course ones that don't, and how I would think it to be pretty effective to trade them.
That sounds fantastic. And before you get started, could you tell folks, you mentioned TPP. What is that for folks?
Oh, LPP. So that's the group that I trade live with every day. So it's very similar to these great live streams that you guys host. I go live and I trade live with our LPP team every day at market open for about 30 minutes to an hour. So it's just, market's always changing. So we're just trying to be there for them every day.
Awesome. All right. So, since you're my boss now,
oh yeah, I'm sure.
I guess I'm going to get out of your way. I'd love if you could just share what you're looking at and hopefully teach these guys something.
Let's do it. So I can click share screen out here, and let's see. I click on this one, share. How am I looking? Are you able to see my screen?
I have to stop my screen share. Now I can see yours. Yes.
Perfect. All right. So what's going on, guys? My name is Ricky. And one of the things that I want to talk about is kind of like, especially based off of the last event that I spoke at, there were so many, there's two other traders and they both have very unique, different trading styles, even including myself. I don't trade penny stocks. I don't trade pump and dumps. I don't trade momentum stocks. And not that there's anything wrong with that. It's just with the dollar amount that I trade with and what I try to focus on. I trade a lot of blue chip stocks, and I trade two sets of inverse ETFs, the ones that follow the NASDAQ market. So those are SQQQ and TQQQ. I like to keep it pretty simple. Or one of the things that I want to talk to you guys about is, I don't know if you guys watch me on YouTube, but one of the stocks that I just bought 2 days ago, and it was because of earnings. It was one of my better trading days. This week has been just an amazing week altogether. I think a lot of it has to be attributed to Tesla's performance. But one of the things that I personally like to trade are reversals. And if we go on the 5-day, 5-minute chart, one of the things that Alibaba announced, and this is one of my favorite times or times of the quarter to trade, is when companies report earnings. And you might be like, why? Like, what does that even do? Well, one of the things that happens is when a company reports earnings, if they don't meet expectation, even if they do meet expectation, but their guidance might be a little bit off, it's crazy. Like, I don't like holding stocks as they're reporting earnings, and it's because I like to buy the dip if they sell off. But you are correct. If they do push up, I do miss out on that. But that's okay, right? Because I'm not here to try to make the most money on every single trade. I'm just trying to make money off of the trades that make sense to me. And when Baba reported earnings, it sold off, and it didn't sell off a crazy amount. It was about 4 or 5%, but it began to find a support level right around 256. I bought a couple of shares. It began to indicate signs of reversal, and right at market open the following day, I woke up being up, I think, like 3,700. I added more to my position size, and then I ended up being up like $4,300 on the day on Baba. Now, Baba, one of the things that I always like to remind people is on the 180-day chart, we're approaching a previous resistance level. This doesn't mean that Baba has to get rejected there. It just means that it has before. So one of the things that I'm doing now is, as we're overbought, if you look at my overall position size, I only have 70 shares. And trust me, 70 shares is a lot of money. I get that. But I normally have 400 shares when something is indicating, signs of an uptrend, and it's still a good deal. One of the things that I really like to focus on is position size and making sure that the overall direction is in my favor. And I actually have a PDF, and Neil, this is actually something that I was gonna ask you. I have this PDF where I can share it with them as well. So we can talk about that later. If they want this PDF, I can send it on over to you, and maybe you can blast it out all to them. But one of the things that I like to really focus on is, if you guys have ever tried this out, it's just reversals. And if you are paper trading or simulation trading, I think that's the best way to practice. A lot of the people that watch our videos, one of the things that you have to understand is, the market is a difficult market to be successful in consistently. Anyone can get lucky, but it's making sure that you practice everything that you learn until it actually makes sense to you. It's not asking people where to buy or where to sell, because at the end of the day, right, you don't want to be told what to do. You want to understand what to do. Just like anyone that's successful in anything, they're not being told what to do. They understand. They're problem solvers, right? So 3 stages of reversal, and I'm going to show you guys some real life examples. This is a perfect example. If every trade looked like this, we'd be pretty dialed in, but it just doesn't work out that way. But this is 3 stages of reversal. There's the rejection phase when it hits a resistance level and it begins to sell off. There's the consolidation phase where it begins to flatline and no longer make lower lows. And then the confirmation stage where it actually begins to increase in value. And if we go to position size, you guys might be like, well, what does that mean? I have, $1,000 or $5,000 in my trading account, and all I do is as soon as it sells off, I buy $5,000 worth of that stock. Well, the way that I do this is, again, I'm not here to, did I stop sharing? Am I still sharing my screen?
Yeah, you have to share the program and not the screen. That
Are we good now?
Yeah, we're good now. Yep.
Sorry about that. But one of the things that I really like to focus on is position size. And as something is selling off, we like to keep it super simple. It's as close to 0 as you can be invested, right? Position in something that is selling off, probably not, right? But normally when something, when people say the idea of like buy the dip, people think that as soon as something dips that it has to pick right back up. And that's definitely not the case. And I'll show you examples of that. But when it comes down to something is now testing a support level, again, this is a very conservative approach and you guys can just take it as you please. But once something begins to consolidate and it begins to, test a support level, then this is where I probably let's say you have $1,000, right, to work with. This is where I would still maybe wait for confirmation, especially if you're under the PDT rule, or take a very small position size at this time. And then when it actually begins to indicate signs of an uptrend, like we know, it's not easy to make money in the market, but it's a lot easier when that overall direction is in your favor. And I think you guys can all speak from experience where if you've taken a trade when you buy the dip, and it continues to sell off, it's a pretty horrible feeling, right? But if you buy something as it's increasing in value and it continues to rally, it's like the best feeling because you're like, this is so easy. But again, it's the idea of understanding not just what to buy, but when to buy it. And one of the examples that I want to give you when it comes down to these 3 stages of reversal is Twitter. Twitter is actually one that I'm sure you guys all heard the news when Trump got banned from Twitter. That acted as a negative catalyst. It was already at 180-day highs. It was already pulling on back. But once that news came out, it was just aggressively dropping, and it really pulled back the stock. We talked about it right away. This is one of the things that I really like to focus on is Twitter. Twitter itself is a stock that's previously bullish. On the 180-day chart, the bigger charts, it's been previously bullish. So I like that. I like putting my money in something that has been increasing in value, not something that has been consistently selling off. That's just my 2 cents, right? And then as it's bullish, it just sold off because of negative news. Negative news, as long as it's not detrimental to the company, it's just something that acts as a negative catalyst for a short period of time. As it becomes less relevant, it can find a support level. It can then break above the EMA line and then begin to indicate signs of an uptrend. This is a perfect example of a reversal. Let me tell you, it does not always work out this way. And I want to give you another example. So I was able to trade Twitter. I have a tendency to lock in profits too soon. And we talked about Twitter today in the LPP live stream, and I ended up selling most of my position at $50. And it's just a habit of mine where I'm just like, whatever, I'll just lock in my profits here. If it pulls on back, I'll buy more. If it continues to uptrend, I guess I'll just leave it at that. My focus more is trying to be consistent rather than obsess about how much more money I can make. I just learned from my experience that more often than not, if I try to maximize my profits and be greedy, I tend to lose more money than I tend to make. So just my 2 cents. An example of a stock that did not or has not gone according to plan is VZ. VZ, which is Verizon Wireless, has been selling off. It's been making lower lows. It showed signs of a potential reversal. Did it recover all the way back to $61? No, it pushed up, got rejected by the SMA line, and then sold right back off. And now we're at the same point, right? We're at a critical point where it's now indicating signs of an uptrend. We're now going to see if it begins to make some higher highs and higher lows. And if it does, I can add more to my position size. But as it's selling off, I don't want to add, who wants to add money to something that's making them lose money? Like, how does that make sense? Like, when you actually think about that, how does that make sense? But guess what? It's a very common mistake that a lot of people make. I've made that mistake so many times. because you want to average down on your, average purchase price. So if it just tends to pick up, then maybe you can break even. And that's kind of the goal for a lot of people, right? Especially when the trade is not going according to plan. The reason that I talk about position size is because we know that risk management is difficult. It was one of the biggest struggles that I personally experienced. And I'm not here to say that you guys are having the same struggles, but how many of you find it difficult if you have your entire account invested in one trade and it doesn't go according to plan because it's still selling off? It's difficult to manage your risk. It's difficult to cut losses. But let me tell you this, instead of you having $1,000 because your account's $1,000 invested in a stock that's selling off, you might hesitate to cut losses. But if you have $50 or if you have $100 out of your $1,000 account, it's still not easy, but it's a lot easier than being able to manage your risk. And this is why essentially, if you want to choose to take advantage of an opportunity early before confirmation, then one of the things that I like to do is I really like to watch my position size. I take a small position size just so I feel like I have some skin in the game, so I feel motivated to follow up with the stock, but not that I add so much to my position size that if it begins to sell off, that I become an emotional mess. A perfect real life example right now is all the people, unfortunately, with GME and AMC. How many of them bought at those super overbought levels? They were so certain, they were so confident when it was in their favor. Anyone can make money in the market when the direction's in your favor. That's not the question, right? But it's when things don't go according to plan. How do you do your part in managing that? I can reassure you that if they only had one share of AMC and AMC began to pull back, or GME began to pull back, they wouldn't hesitate to cut losses because it doesn't matter. It's insignificant. And you need to understand, you need to learn how to walk before you run. So if you're learning how to trade, but you're taking aggressive position sizes, I'm not saying that it's impossible. I'm just saying that you're making it much more difficult for yourself because you're not controlling and balancing out your position size to be both effective and efficient, and more of an emotional mess and heavily invested. But you are correct. If you do have a heavy position size, you can make a lot of money just like you can lose it. So that's kind of my 2 cents on, and I wanted to talk about a recent stock that reported earnings. This one's not one that has to go according to plan. I actually talked about this one yesterday, and it's actually because of it reporting earnings yesterday. I'm like repeating myself, but it reported earnings yesterday. It acted as a negative catalyst, and 3 things I like to focus on. 3 things for my criteria. Everyone should have their own criteria. Mine does not have to be like yours, and you do not have to agree with mine, right? We're all entitled to our own opinion as we all see value in different ways. I like fried chicken tenders. You might not, but guess what? I eat them pretty often and I feel okay. So QCOM has been consistently bullish for the past 180 days. I like that. It's been showing consistent growth. That's my first criteria. Not something that has been consistently selling off. Why? Because it's a lot easier to make money in the market when the overall direction is in your favor. This is consistently bullish, so I like that. The second thing is it consistent? Does it have a consistent pattern, or is it just pushing up and pulling back and pushing up and pulling back, or is it all over the place? Is it breaking below the SMA line? No, it validates the SMA line pretty often, not perfect, but pretty often. I mean, it's the real world, right? Pretty often it validates it as a support level, and as it becomes overbought, pulls on back, it corrects itself, becomes overbought, corrects itself, pushes up, becomes overbought, and corrects itself. So now the last thing is, who likes to overpay? Who likes to buy things at higher levels? I don't know about you guys, right? But if it's my Chipotle, if it's my Raising Cane's, if I can get a discount, if it's my Chick-fil-A, I will get a discount, right? It's like we're deal hunters. And especially when you're in the market to try to make money, it makes sense on why you want to buy things only when they're good deals, when they meet your criteria. And this is what I mean by this. This earnings acted as a negative catalyst. It pulled it on back. You would have to not only look into it on the technical aspect, but on the fundamental aspect of why did it sell off? And if you then determine this to be something that is not detrimental to the company, and then you take the very simple approach of, okay, well, I'm not going to buy right now because it's still selling off, right? It's free falling. And the more patient that you are and you stay, the more it can sell off and the better deal that you can get. So think about that, right? Now, as it finds a support level, so let's say as it sells off, it finds a support level and then it begins to indicate signs of reversal, then you can calculate, okay, well, my support is right around 150. let's say I buy in and I begin to average up, my upside based off of 180-day highs is about 10%. My downside is less than 1%. So my risk does not outweigh my reward, right? My reward is much greater than my risk. So with that, it meets my criteria. It's a good deal. It's been previously bullish, and it's consistent. So it's something that I can pick up on. And those are the three main focuses that I have that align with my 3 stages of a reversal. So did I do, Neil? Did I do okay?
You did fantastic. Okay, so I actually want to ask chat, guys. You know, you guys are probably familiar with Jason. He's kind of the founder of Benzinga. How does Ricky compare? Do you think long-term potential for CEO at Benzinga? Let us know in the chat. Give me a 1 if you want Ricky to be the new CEO at Benzinga forever, or if you want Jason, give me a 2. All right, that's in the chat.
That is too funny. I just spoke to Jason a couple days ago, I think over DM on Instagram.
That's his favorite mode of communication.
Right.
Rumor has it he actually communicates with his whole family through DMs. But at any rate, Ricky, I think you're a little.
How do you come up with these jokes?
Knowing people a long time, and then just
right.
the rib. Ricky, it's been great to have you on, man. I think Chad has loved you. Would you come on again if we ask you? If we are in dire need of leadership, can you join us again to take over?
I would be more than happy to. So anytime that you guys need a filler spot, I'll be your filler.
All right, Ricky, that's all the time we have today. Thank you so much for coming on, and we will see you very soon.
All right, appreciate it, Neil. Take it easy.
You too, bud. All right, guys, this is an opportunity for me to remind you that you can catch folks like Ricky Gutierrez at the Benzinga Boot Camp. That's a full day of education across the board, but this time we're doing something special. I got the Luke Jacoby hands up for this, all right? We're doing something special this month for at the Benzinga Boot Camp. We're focusing on SPACs. SPACs, baby, and options. All right. So if you want to learn how to trade options like a master, like a wizard, like a conqueror, like a warlord, come to the boot camp. All right. SPACs and options. We're going to have your guys from SPAC Attack, which is coming up right after this segment at 10:30. We're going to have Mitch. We're going to have Chris there to walk you through their portfolios or watch list. They're going to be there. Wait, Spencer, what are you doing? Are you giving me the boot?
No, SPAC's Attack is at 11, man. We got the happy hour, the Benzinga Pro.
All right. Get
hour.
Get out of here. Get out of here.
Get out of here. All right, bye.
Yeah, go. All right, so SPAC Attack, 11 a.m. after the happy hour, where we're going to go through Benzinga Pro with Ryan Faluna. Ryan Faluna is a fantastic technical trader. In fact, we will have him on this show later, but make sure you stick around for that Benzinga Pro happy hour at 10:30 because he will be talking about real-life trades using Benzinga Pro, combining the fundamentals with technicals. Yes, he's a little more reserved and collected than I am, but the man knows how to make money on the markets. Some might say I'm a little bit crazy, but hey, I'm here to have fun, guys. All right. Once again, this is not financial advice. This is about fun, community, and looking for opportunities. So guys, let me get, how to get to the boot camp. It is free. The boot camp is 100% free to get to. You just have to register for it. So we've got a link. That's not, I don't think that's clickable for you. You can see it on the screen, but we should have it in the chat. Get on over there, check out our roster. The full speaker list isn't even on there yet, but we have some great folks lined up for you. SPACs, options, intro to trading, short-term trading, long-term trading, and some picks. You can also sign up for an optional power hour, not like our show power hour. This is more like a stock pick intense with Chris Camillo from Dumb Money, talking about trades that are happening right now, stock opportunities right now. So definitely something that you want to get into if you're ready in your brokers, you're cooking and looking for picks. Definitely something you want to get. That's completely optional. So guys, that's the boot camp. Check that out. Also, I mentioned something. I mentioned something weird. I had this bizarre dream. I'm like JC Peretz. I was having dreams. And in my dream, only half of the folks watching the show were subscribed. I woke up from my dream. I had to have a cup of water. I drank it like this. And after I had that cup of water, I checked the stats and it turned out it was true. That's right, guys. My dreams turned into reality. Let's change that. Guys, if you're watching the show right now and you're not subscribed, just hit the subscribe button. It's a little red button. Just give it a click. Hit the little bell next to it so you get notified every time we're on. We do all kinds of special stuff that we're not going to let you know about. We're Benzinga. We like surprises. We will surprise you more than any media network on the planet. If you've known us long enough, you know I'm not kidding. So, on to the next thing. Guys, let's dream up some gains. I like the way you said that. 13 or whatever you like to go by. So, guys, give me some tickers if you want to look at them. One thing I wanted to point out that I didn't point out earlier is that Microsoft is looking like a snack right now. I'm going to get my chart for Microsoft. Yes, there is a little selling off going on, but Microsoft is looking like a snack. So let me get this screen share going. Share screen. Blah, 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 blah. All right. So I got my chart open. Everyone should be able to see Microsoft. Let me move this other application over. All right. So Microsoft. Ascending wedge or ascending triangle. Boom. Boom. We like this. We had that pull. We got our pull that we like to see. We saw some powerful bullish action. Okay. And yes, there's a lot of stuff going on with companies, but the truth about patterns when you see them in the market is that when they form and they are confirmed by volume, I know you're going to think I'm crazy. Maybe I am. But a lot of times, most of the time, a lot of the time, it doesn't really matter what the company is or what they do. You can do this across any asset class. These patterns hold true. I'm not going to, it's not magic or anything like that. It's just based on the way that human behavior works and how that shows up when we aggregate it with price over time. This has been going on. We observed for hundreds, if not more, years. So at any rate, what is the next Tesla? That's what I need to know. Okay, we'll find the next Tesla together. We'll find it here. So at any rate, we've got a pull. We've got an ascending triangle on Microsoft. I love Microsoft right now. My goal with Microsoft is to get a candle above this resistance that looks like this. Whoops. Like that. Like that. I just want to see one of these. If I see one of these, ladies and gentlemen, I'm buying calls. I'm buying calls. I know there's risk involved with buying options, guys. This is not financial advice. There's risk involved with buying options. You stand to lose 100% of the money that you put into buying them. But I have conviction based on what I see here on this chart and the fact that it's Microsoft and the fact that they're doing a lot of great stuff, both in gaming, with their hardware, with office software, that this company is going to continue to go up. All right. So I'm going to set my conservative price target to be the height of this measured move. This measured move is this first swing high to resistance down to the swing low at support. So let's go ahead and draw our little line. Boom. Boom. Nice and simple. And let's add that to the potential breakout. Let's say it could happen here. That's a price target of 254. And then if you want to get more aggressive, we're adding our pull to our resistance for a secondary price target of about 270. Look at that, on the dollar. On the dollar. All right. So that initial stop loss, it's going to be about, I don't want to get stopped out, maybe 5 to 8% below the resistance line. And then once I get here, I'm taking profit. But guys, it's Microsoft. I want the profit now. I want it back in my portfolio so I can buy stock in the next Tesla that I'm going to find for the gentleman that dropped that in chat, man, woman, or person. But I'm still going to stay in because I have conviction based on this pattern, based on this market, that we're going to see a resolution getting it higher. All right, guys, what do we got next? Do you set sells at those prices? Yes, I often do. Yes, I often do. If I'm buying shares of the stock and it's based on a pattern, I will set an automatic sell at this level. Yes. But if I'm in something that's short term, even if it's a swing, say something I expect to resolve over a week, 2 weeks, that's kind of where I live. that time range, I am checking that every day. Why? Because it's my money, and that matters. We live in a society where money is very important, so we pay attention every day. This stuff doesn't, run itself. But also, hey guys, like a lot of you, I have a full-time job. I'm a busy guy, so I check it as much as I can. ACTG, I'm going to look at. I got that from the chat. Holy shit. What do I think about it? I think it's on a huge run on huge volume, and it definitely followed what we call a bull pennant here. So boom. Let's go ahead and just test out our little bull pennant theory. Something kind of like this. All right. So we've got the measured move, which was initially. Let's go ahead and bring that down. I'll be aggressive here, and I'll use those wicks on the candles. The wicks on the candles, guys, are these lines outside of the chunky part of the candle. All right. I'm going to draw a line from the top of the swing high to the bottom of the swing low, and we're going to add that to where it broke out, which is right here. Holy shit, guys! Look at that. If you look how pretty that is. It broke out right here. Yes, it's like within like a couple bucks, but look at this. Look at this. It very safely hit the price target on that breakout. Let's go look at it more aggressively. Yeah. If we look at this more aggressively, we got this pull. Bring this to the top there of the high of that measured move. Add this to this apex. Look at that. Does it have room to run? Yes. Will it for sure get there? I don't know. Should you watch it? Yeah. All right. So let's look at this over a 4-hour time period. Yes, it sold off. Should you panic run? No. Don't be a baby. Definitely be safe. Keep a tight stop loss. Like I said before, you can pretty reasonably set your stop loss at or a few percentage points below the previous conservative price target, which we just about hit. So a lot of you might have gotten stopped out, and it looks like it's selling down today. And it's a decent amount of sales volume, not super duper high, but getting close to where the second highest previous volume. So what I would say is watch it today. Look for something on a shorter term. We're on 4 hours. Let's look at it shorter term. All right, the bulls are saying, come on, this is a pretty aggressive candle, sellers. We think we're going to come back. So potential here to get up to this target. But the reality is, guys, if you weren't already in this, you missed a breakout, and that's just how it works. There's always more. There's always more to get. So don't chase. Don't chase. All right. Sometimes you can get in a breakout that's already broken out, like, if it has like a long potential, and you can get profit from that, but don't chase, guys, unless you're already in. The ticker on this is ACTG, Alpha Charlie Tango Gorilla. DraftKings, DKNG. Let's take a look. I've only got 3 minutes left with you guys, so we're gonna look at this really quick, and then I've gotta play the sad music because I have to leave you for the day. I don't want to. Okay, so I'm trying to find something interesting with this. All right, so let's look at 4 hours. This might be, in technical analysis, what we refer to as a hot mess. But let's zoom out a bit more. Let's look at the weeklies and see if there's something on the longer term. Context matters with these. Yes, here it is. Here's that context, ladies and gentlemen. Look at this. Previous all-time highs. This looks a lot like Palantir. DraftKings looks a lot like PLTR right now. This chart is giving me flashbacks. So previous all-time highs. Don't bet against all-time highs in this bull market. When stocks hit all-time highs and surpass them, they like to keep going a little bit. All right. So what I'm thinking with this bad boy with DKNG is, I don't know if I'll get into this one. I will add it to the Get Technical watch list, DKNG, so we can come back to this one. I mean, it's DraftKings. It's super popular. People have made a lot of money with the stock. What I will say is that this is a meaningful level right here. So folks the buyers might come in here, but the most meaningful level right here is this previous all-time high. This is a resistance line. If we break through this resistance following a period of consolidation, actually not even consolidation, I mean, we hit the bottom here. This is, guys, I got a term for you. This is called a double tweezer. This is pretty damn textbook double tweezer. When you get a stock that's trending downward and you get two candles right next to each other that look almost identical, that's a reversal. Okay, that's a reversal. So was I watching DraftKings in the past, I would have gotten in. When I saw this bad boy open down here on the bottom left of this green candle and then close on the top right of this, I see tweezer. I get in. I'm gonna hold that baby with a tight stop loss, maybe 1 to 5% trailing stop loss, and ride it to profit. But yeah, here's what I got to say about DraftKings. Let's get this thing to break through resistance. Let's get a candle to actually stick above it. And I'm sure Spencer is telling me I'm out of time to stick above it. And then if you like the stock, I would grab some and keep a tight stop loss. With something like this, depending on how quick it's moving, I even do a 1% stop loss, guys. This is a very popular stock. It could really run depending on the volume that's coming into it. You know, I might get into this with a 1% stop loss. All right. Again, this is not financial advice. This is just fun times with Neil on Getting Technical in the Morning with Benzinga. Just a reminder to everyone, hit the subscribe button so we can keep doing this for you. If we don't get enough subscribers by the end of the week, Ricky Gutierrez, our new CEO, is going to cancel the program. And we're not going to be able to do this anymore. Don't take that away from me. I love this. All right? I love spending the mornings with Spencer and you guys and all our awesome guests. And I want to keep doing it. And I hope that you guys too, so do too. So hit that subscribe button. Let us know what you think. Let us know if you like it. Also, Benzinga Bootcamp. Go to benzingabootcamp.com for a full day of education, options, SPACs. Mitch is going to be there. Chris is going to be there. That's it. Up next, we've got the Benzinga Pro Happy Hour with Ryan Faluna. Thanks so much, everyone.